All right, on that note, let's get to Kevin Green, who joins me now, as always, for a look at the stories that are moving markets this morning. We did get some data out today, by the way, of the mortgage applications at KG. What are you seeing on that front? Good morning to you.
Good morning, Sam. Yeah, you are actually seeing a really significant surge in refinancing demand. We have seen mortgage rates pretty much across the curve if you're looking at the 30-year fix or if you're looking at the adjustable rate mortgages that have shorter terms here. Those rates have been going lower, kind of matching what we have seen for the 10-year Treasury yield as well. And we actually did see for last week, mortgage rates falling to 6.37%. Previously was at 6.42%. Refinancing applications actually grew 4% on a week-over-week basis, but if you're looking at year-over-year, you're actually looking at around an 81% increase, not only when it comes to conventional refinances, but also for FHA. So a lot of these individuals looking at these lower rates, maybe taking some of the equity out to maybe improve their homes or utilize that cash to pay bills, but you're not really seeing a massive uptick when it comes to purchasing applications. We did see a 5% increase on a week-over-week basis, but if you're comparing it year-over-year, it's around a 20% growth. So we do know that there is still maybe some pressures when it comes to home buyers in the market. We are seeing supply actually hitting the market, and we will get some housing data later this week that'll give us a little bit of a better picture as to the inventory levels within the housing market just in general. So overall, the trend is to the downside when you're looking at mortgage rates. Refinancing looks like that's actually the big winner instead of maybe new home purchases or even existing home purchases.
Okay, so things are looking marginally better, you could say. They're not getting worse, at least for now, in the housing market. We've got earnings season in full swing, as we know. We've heard from a lot of companies out this morning. All eyes, of course, on Tesla and IBM later. But what are your takeaways from what we've heard from some of the companies so far? I'm seeing, first of all, GE Vernova is down off the back of its report card. What are you seeing on that name?
Yeah, so we are seeing it down about 3%. It was trading around 4% higher in pre-market trading. Now, this is a stock that actually does have a pretty wide range when it comes to the bid-ask spread. Not really that liquid or a lot of volume there, but they actually did report a really decent earnings announcement, to say the least here. They did see total revenue coming in at $9.97 billion. Street was looking for around $9.15 billion, and this is actually the largest beat that we've seen since the IPO, or the spinoff, if you will. We did actually see the adjusted earnings per share coming in at $1.64. Now, this is below the street's expectations of $1.95, but this is because of the wind business. So we did see a cancellation of a really big offshore project that was canceled by the Trump administration that actually did obviously impact the company's earnings. But when you're looking at the electrification segment itself, it is growing pretty rapidly. We do know that they actually generate and build out these gas turbines, and these turbines are pretty much built out until 2027. So they continue to see a buildup of orders here. But this looks like more of a sell the news type of an event. It is actually priced pretty aggressively when you're looking at the price to earnings multiple. So maybe a little bit of selling, unfortunately, is breaking a little bit of structure to the downside. So we could actually see more aggressive selling over the next couple of trading sessions if it's not able to recover during this session here today.
Yeah, I mean, this is just such a fascinating story and a name because, I mean, you mentioned some of that strong demand for the gas turbines. I mean, it expects to have a backlog equal to 3 years of production, as you mentioned, Kevin. And I've seen that some of the analysts are saying this is highly unusual as far as some of the visibility that this company actually has. I mean, it's in the business of power. I mean, and we need a lot of it when it comes to AI. But I do see that some of the analysts are quite concerned about the fact that maybe the stock price is a bit too high, so materially overvalued right now. Maybe that's got to do with something as well. But just switching gears to what we're seeing as far as crude oil this morning, we're seeing it tracking higher. We're tracking, obviously, a number of suggestions and developments around trade deals with, obviously, China, but also it looks like India could be close to a deal. And then some of the caveat to that trading relationship has to actually been to wean themselves off the Russian oil purchases. What are you seeing there?
Yeah, I think you are seeing a little bit of a technical bounce. I mean, obviously, crude oil has been oversold. It is hitting a key area of support around this $55-ish area, and you are seeing some buyers really stepping in. The weekly chart is still showing maybe a potential bearish trend here, but if we do actually end the week with a nice hammer candle, maybe some buyers really do step in, and then you're looking at the resistance area of around $64.40 or so here. Obviously, a lot of the developments that we've heard, especially when it comes to India and their ability to potentially lower their imports of Russian oil itself, maybe pushing prices up a little bit. But I will tell you that's going to be very hard for India to do. It's not only because they consume a lot of this oil, but they actually take this oil in, refine it, or even just put it on a different ship and then ship it out to Europe. I mean, it is one of these hubs that is able to be the middleman, if you will, for Russian oil. So, we'll see if that actually does take place. Trying to find new supplies in this market outside of Iran and Russia is going to be a little bit difficult for India. They can take in U.S. crude, but it's not going to be heavy sour crude, which is really what India wants to get, and that's really where the premium is in this market. So once again, I think this is more of a technical bounce. You're looking for some oversold areas of the market, especially the commodity space, and you are seeing a little bit of a rotation going out of some of the overvalued names like gold, silver, and some of the other metals that are out there, maybe putting it to work in some of the energy products that have been oversold, natural gas as well as crude oil, and even looking at the diesel market catching a really decent bid today as well.
Yeah, I mean, just speaking of the metals and some of that rotation, I mean, gold continues to lose momentum today, although it is holding, it is managing to stay steady above that 4,000 mark. But, I mean, the rest of the commodities patch is actually looking higher today. I mean, you look at silver, copper, palladium, platinum. Can you speak to some of the price action we're seeing today?
Yeah, so for silver, we did obviously see a decent pullback yesterday, and even this morning, it is hitting a key resistance line, if you will, this trend line to the upside since August. Gold is pretty much doing the same. It's only about maybe $40, $50 away from that trend line as well. So let's see if some buyers actually do step in. I think, once again, we had some really aggressive selling over the last couple of trading sessions, especially if you're looking at platinum or palladium. Maybe some buyers are trying to cover some of those shorts here. And I think if we do get a hot CPI print on Friday, a lot of these metals may actually catch another bid to the upside, especially when you're looking at silver. Industrial metals really do thrive in a high inflation environment, high economic growth environment that also is complemented by monetary policy that's easing, as well as fiscal policy potentially supporting the market as well. And I think that's probably not being priced into a lot of these commodity markets, that the fiscal side may have to actually be leveraged a little bit in order to get this shutdown done, but also try to dampen some of the impacts of the economic because of the government shutdown. That is something that could be on the horizon here. So a decent bid so far. Let's see if it's going to hold. Be very cautious, though. A lot of gappy activity, to say the least, when it comes to the metal space as a whole.
Yeah, and I mean, if it does come in higher as far as that inflation print, I mean, what that's going to mean for the markets is the big question as well. I mean, as to what they're going to be penciling in as far as their rate cutting expectations come the following week. But a good look at the markets today. Thank you so much, KG, as always. Really appreciate it.